everyone, I am Briana with Bankrate, where we've been a trusted provider in accurate rates and financial information since 1976. And in today's video, I'm going to be talking to you about when it's a good time to refinance your mortgage, as well as a few other refinancing tips at the end. So make sure that you watch all the way through. But before we get into that, I just want to encourage you to subscribe to our channel. We post so much valuable financial content, personal finance content, and also visit us at bankrate.com, where again, I'm sure that you'll find something of value. But let's go ahead and start talking about when it's a good time to refinance your mortgage. So as a typical rule of thumb, I like to say that if it is saving you money, building you equity, or helping you pay off your mortgage faster, then it is a good idea to refinance. Now, when we look directly at rates, if you're able to find an interest rate that is at least 0.5% to 0.75% lower than what you already have, go ahead and refinance. And the reason that I say that is because interest rates that much lower will typically translate into significant monthly savings. Now, as far as monitoring rates and knowing what they are, I really encourage you to check us out again at bankrate.com, but to also check out our Bankrate dashboard tool, where you have the ability to build a custom view of this site that is applicable to you and your finance needs. So you can closely monitor mortgage rates, student loan rates. You can use different loan calculators that could help you with your financial situation, and it is a very helpful tool. So be sure to check that out. Now, we've talked about rates and when it's a good time to refinance them, but I want to make a point of saying that there are some situations where it may not be a good idea to refinance. And that's typically going to be if you plan on moving or selling your house within the next 2 years. And the reason that I say this is because when you refinance, there's going to be a refinancing fee associated with that is typically about 2 to 5% of the principal balance of your loan. And so if you are unable to cover that cost in your monthly savings that you incur from refinancing, then you'll end up losing money from refinancing rather than saving money. And so because of this, you want to be aware of when that break-even point is for you. And what I mean by break-even point is that the amount of time it will take you to cover that refinancing cost with savings. Now, the way that you calculate your break-even cost is that you take the amount of the refinancing fee and then you divide that by your monthly savings. So let's say, for instance, that the refinancing fee associated with refinancing your mortgage is $3,000, but you're saving $192 each month from this refinancing. And so if we take the $3,000, divide that by 192, it gives us 15.6 months that it will take us to break even and cover that refinancing cost. And so in this situation, if you intend on moving prior to that 15.6 or 16 month mark, it is not a good idea to refinance because you're actually, again, going to end up losing money. Okay, so now that we've talked about when to refinance, let's talk about a few other things having to do with refinancing. And one of the most important is why you're refinancing. So depending on the goals that you're trying to achieve, it's really going to determine the decisions that you make in refinancing. You could be trying to go from a variable rate to a fixed rate. You could be trying to go from a 30-year term to a 15-year term. And again, these are all things that you want to consider when you go into the refinancing process. Another reason that you may want to refinance is to rid yourself of the private mortgage insurance that you have to pay up until you get to a 20% equity mark. So once you have 20% equity in your home, then you can refinance so that you are no longer obligated to pay that insurance. Okay, so the last piece that I want to leave you with is a common question when it comes to refinancing, and that is, how long does the refinancing process take? And the answer to that is it depends. There's a lot that goes into it. There are a lot of requirements like appraisals, inspections, credit checks. But I like to say that it's typically going to take around 30 days for this whole process to play itself out. So you want to go in expecting that amount of time. It's not an overnight thing. It's not just a few weeks. It could take anywhere up to a month. So keep that in mind. Okay, so there you have it. I hope that you enjoyed that crash course on refinancing your mortgage. But more importantly, I hope that you found something helpful out of it. Again, I encourage you to subscribe to our channel. Turn on the notifications as well, because we're constantly uploading and I don't want you to miss any of this valuable content. And give this video a thumbs up if you found anything throughout it helpful. I'd appreciate it. But that's all I have for you guys today. I can't wait to see you in the next video. So until then, bye-bye.